Welcome to Pharos Leadership. Today we're going to talk about a leadership topic that I've talked about before. In one of my videos I talked about how Blockbuster basically driven out of business by an upstart company called Netflix, and how Netflix was so much more innovative. Well, now we're quite a ways into the era where Netflix has been the king of the hill for quite a long time. That creates its own special problems because eventually you get competitors entering the market. Eventually you've got to respond to those competitors. And the question is Netflix adequately responding to the competitors that are in the market? And so let's look over what happened last Wednesday. Now we're talking Wednesday the 19th. So here's the first article that we get. Now Wednesday the 19th is their normal quarterly earnings call. They get on the phone and they start sharing their information. And it's not necessarily that their earnings were bad, because their earnings actually beat Wall Street expectations. You know, it beat the $2.90 per share consensus led by Bloomberg. So it's not that they did horribly bad on their earnings, but when it got down to their subscribers, so while they were expecting to go up to 2.5 million, they went down by 200,000. What that does is it waves big red flags to financial analysts out there that are looking at the stock, saying potential future earnings of this company are in the tank. What's happening? Do they have control of it? Where are they going with this? The consensus was, oh no, let's bail out of their stock. So there are tons and tons of sell orders. So what happened? Tons and tons of sell orders mean your stock price plummets. So here we see the 19th, and here we see Monday, okay, the 20th, or the next day, the 20th, okay? So you're seeing these days go on, and all of a sudden it literally erased 37.7% of their stock price overnight, from 419 on 419 in the afternoon at 4 o'clock to 10 o'clock in the morning. Their stock went from $348 down to $217 for a drop of 37.7%, or $131 taken right off the top of their stock. Now the problem doesn't stop there, unfortunately. A lot of times they'll take a drop in the stock and they'll see what remediation plans that the company has in store for it, and the stock will usually bounce back. It'll usually hit the bottom and then bounce. No bounce here. As you see, it just continues its downward cycle, and now it is only at $188, which, if you compute from the day of the earnings call to today, is a whopping $160 off their share value and 46% drop. So what's going on here? Did Netflix have any idea that this was going to happen? I kind of suspect that they did, because in January they raised rates on all the United States and Canadian subscribers to the tune of $1.50 for each one, Canadian $1.50 and a US $1.50 on the subscription price. Their subscription prices are slightly different, but it was a $1.50 delta in both places. So they were seeking to raise more money, and this would raise $111 million more per month if you just took the straight $1.50 off the top. So in a revenue stream, that adds a bit to your bottom line. But Netflix is a huge company, and that amount was probably not really substantial. In fact, it didn't really help them much. Although they did beat earnings analysts' expectation on the share price, it didn't help them garner more subscribers. So what happens? Now that their stock price has tanked, what are they going to do about it? Well, the day after, I find an article that Netflix Animation has taken a major reorganization. Phil Rinda, who was the Director of Creative Leadership and Development for the company, has been let go, and quite a few of their projects that they were working on or shows that are in flight have been canceled. Netflix animation is taking a hit. Maybe they didn't feel that they were getting the kind of revenue stream that they needed from them. There's, in this article, it goes on to complain that a lot of the creators of this are complaining that they don't believe the data that Netflix is sharing them, that they're earning so little on the platform. They've been complaining for about the last 6 months that Netflix was not advertising for them like they normally would expect, that they pretty much had to go on their own social media platforms to advertise themselves and try to bring subscribers and bring people to watch their shows on Netflix. So a lot of discontent in the animation side of things. So what else are they doing? What else are they doing? Here we get another article the next day also. As Netflix shares plunge, they take aim at password sharing. So they're going to try to get more out of their subscribers, or get their subscribers to stop abusing the service, which I think is something that should have been done as things go along. The challenge is that it's probably too little too late. Netflix is going to suffer from this, and they're going to suffer to regain footing for probably a long time. The main reason is they've got competitors in the market with very strong feet on the ground and ready to just eat their lunch, and that's probably what's happening is their subscriber base is deciding whether or not to keep things like Prime Video, which is their number one competitor, or keep Hulu instead, or migrate to Disney. A lot of the shows that were on Netflix, such as the Marvel universe, are now on Disney. YouTube is even getting into the act with their YouTube TV and their streaming service for movies and such. HBO launches their own, and they're sitting there at number 5. And then you've got Sling, and then you've got a bunch of people, lesser names. You've got the incursion of major competitors. You've got Netflix responding poorly enough that they couldn't see it the previous quarter to give guidance that they've got competitors and they're working on the competitive marketplace and possibly lower expectations on subscriber rates. Saying that you're going to grow by 2.3 million and then you decrease by 200,000, that's a major miss. The stock market just does not like that. Wall Street hates having that happen. So what you've got here is a situation where, just like Netflix did it to Blockbuster, Prime Video, Hulu, Disney, and a host of others are launching their own services and taking bites out of Netflix's revenue stream, and they're going to need to innovate in order to keep going forward. Hope you've enjoyed this video. If you want to go review the video we did on Netflix earlier, you can get that up in the screen to my right, and hope to see you again later. Thanks.